Welcome to the 2014 IMF annual meetings. I'm James King, the banker's Middle East editor, and I'm joined today by Guillermo Mondino, Citi's head of emerging markets research. Guillermo, thank you for your time. I'm keen to understand basically how the conversation around emerging markets has perhaps changed this year compared to the meetings we had last year.
Hi, James, and thank you for inviting me. Well, the conversation has changed and has changed somewhat, but I think it has changed more in terms of advanced economies conditions than in terms of emerging markets. Now, of course, when the advanced economies conditions change, everything, the landscape, the backdrop for emerging markets do change. Where has it changed? Well, I think we are a full year into the movement towards interest rate normalization in the U.S., and also we've moved a fair bit in terms of Europe. There's a lot less optimism around Europe this year than there was last year. The recovery in Europe seems to be coming to a stop. It's threatened by deflation. And so there's a lot of focus, of course, in the notion of divergence in monetary policy between a normalizing US and UK and Europe and Japan continuing to need much more significant monetary and perhaps fiscal impulse in the near future. So this divergence in policy has taken a very important role in these discussions. Now, the divergence in policy has a very important implication, which is a change in the value of the dollar, not just against the euro or potentially the yen, but certainly a change in the value of the dollar against emerging market currencies. And so the divergence in monetary policy concept now is a concept about a strong dollar as well as potentially diverging interest rates in bond yields and in advanced economies. The divergence in bond yields is probably going to lead for capital flows away from the super low yielding European and Japanese markets towards North America, and from there ultimately in chase for yield to some of the higher quality emerging markets that have higher yields. So in that dimension, this is a world where there's still some room for the carry trade, but it's a much more limited room for the carry trade than what we had last year. The other dimension in these meetings that has become much more focal point is a slowdown in China, and where there's much greater concern about the impact of the deflation of the real estate bubble in China, the impact on activity, and the impact on commodities. So in a world of strong dollars and weaker growth in China, plus the sizable investment in the commodity supply process, implies that we're likely to go into a phase of low commodities. And so there's a fair bit of discussion as well on low commodities. And that also has a significant impact on emerging markets because low commodity prices can affect some commodity exporting countries and can separate it between the commodity exporting emerging markets and those that are more manufacturing oriented emerging markets. So this is also a very big theme in this summit, and I imagine that it will continue to sort of shape the discussion over the next few months as we go forward. Other than that, I think there's a growing concern with some sizable emerging market economies, but those growing concerns are perhaps more framed by the global issues than the local tone, but the concerns are typically based on the very low growth that we've seen in emerging markets in the last year, and whether that low growth will revert next year or not. But as I say, this is perhaps to a great extent explained by the changing global backdrop.
Now, last year, Guillermo, we saw some volatility in the so-called fragile five economies of Brazil, Indonesia, India, Turkey, and South Africa. So where do they stand in this picture today, and perhaps what's your prognosis for their outlook over the coming year?
The fragile five, of course, were the focal point last year of a lot of the volatility as we saw significant repricing in U.S. interest rates in the long end of the U.S. interest rates. We are expecting that the repricing this year will be, going forward, will be perhaps less violent, in part because at the same time that we're going to go into a normalization of monetary policy in the U.S., we're also going to have probably an ECB that will be injecting significant amounts of liquidity in the market. So to some extent, that impact will be further neutralized. So in that dimension, we think that the channel through which emerging markets in general are going to be affected will be more muted. But more to the point of your fragile five question. So the shock is likely to be smaller. Now, the fragilities have also changed in some countries. Some countries have managed to close some of their current account gap. These tend to be the countries that have been and that are more biased towards manufacturers, like India and Turkey, and or services. And the other three, South Africa, Brazil, and Indonesia, more biased towards commodities, of course, have not had any major improvement in their current accounts and their need for funding from external markets. Now, I would add that perhaps in this world that I'm imagining where liquidity from Europe helps, the pressure on the current account will be less emerging from the cost of funding and more emerging from commodity prices in terms of trade. So I think that we're still going to have some issues going forward for some of these fragile fives. And at least there's a subset where the challenge will be more on growth, will be more on the current account adjustment, and eventually will be on the ability of these countries to face any volatility that might emerge when the Fed starts normalizing rates. So the fragile five have mutated somewhat. We perhaps should add a few other emerging markets that are significant commodity importers and face the potential for larger capital outflows. I'm thinking about places like Russia that could be vulnerable now. But yes, I think there's been a little bit of a mutation in the fragile five concept. I think India is perhaps the one that's further away from the group, and perhaps we're substituting India with Russia this time around.
Okay. Guillermo, thank you very much for your time today.
Thank you.